I'm Charlotte McLeod with the Investing News Network, and here today with me is Nick Santiago, CEO and Chief Market Strategist at InTheMoneyStocks.com. Thank you so much for joining me online today. It's always great to have you on.
It's great to be back. Thank you so much for having me.
No problem. It's always nice to have you. It's great to be kicking off the new year with you. I think we have a lot to go over. Where I want to start is looking a little bit backward to 2022 first, because we last spoke, I think, around late September when gold was around $1,625 per ounce. You told us at the time it could go even lower, maybe all the way down to $1,500. Ultimately, we didn't go that low, but I do want to start by asking, is that 1,500 move still in the cards for you?
It is still in the cards for me. Right now, we've had a great rally in gold and a tremendous rally in silver as well. So precious metals have moved significantly higher. But what a lot of people don't realize right now is that the dollar has had a big pullback. The US dollar, that's topped out, basically in October. And then you also have this war going on in Russia and Ukraine. And you'll also see, very often we'll see, especially on a global scale like this, where you have NATO kind of almost antagonizing Russia on a daily basis, bringing more and more troops, weapons in there. And people are saying, hey, I'd rather own something tangible. And I think that's really the big catalyst for gold right now. I'm not a bear on gold, but I still think that 1,500 level is alive and well. And, I would be very careful owning gold up here at this area. If you own it, I would start to protect it. I'm not bearish gold at the moment, but if I do get a sell signal, I think the next leg down takes you to that 1,500 level, which will be the ultimate buy area.
Yeah, let's put that into some context for people. So maybe, can you talk about whether that 1,500 point is a 2023 story? What price range might we see for gold this year?
Well, if gold is very overbought and extended now, as it's basically above 1,900, sitting around, I guess, the 1920s. But I do believe if we get any kind of major correction, gold could deflate. And if it deflates, the floor, I think the floor for gold is 1,500 handle, whether it's 1,520, 1,550. That's debatable. I'm not sure yet. I'd have to look at it when it got down there. But I think that's going to be your chance to really get into gold for the long term. And then I do think gold ultimately breaks out to a new all-time high. I'm not expecting 5,000 like a lot of people are, or 10,000. But I think in the realm of, high 2,000s, maybe even a break of 3,000 is most likely. But I do think that, you got to be careful up here. The one thing I will tell everybody is that when everybody loves something, I always want to move away from it. Right now, you have so many upgrades going on in gold, so many big firms upgrading gold. And in all fairness, there is a lot of gold buying going on right now with central banks like China, India, Russia. They are buying a lot of gold, but it's just too bullish of a trade at this stage of the game. So if you own it, I would start to protect yourself. I wouldn't be a buyer up here.
Right. And, I mentioned putting this into context because I think that people hear that 1,500 number and they get a little worried about that. But for you, that is the move down. And then after that, we kind of go off to the races. That correct? Exactly.
That's the move down to go out of, right? So a lot of times what will happen, and I'll give you a great example of this. If you go back and you look at September 1st, silver put in a bottom at 1740, I believe. Prior to that, it had hit 1,800 and it staged a pretty good rally. And then it came back down and made a lower low where everybody got bearish on silver. And myself and my members, we not only bought SLV, SIL, which is Silver Miners ETF, and a bunch of other silver plays, but we actually bought physical silver back then and bought coins, and we were paying $4 over spot. Now try to buy a silver coin, it's like $14 over spot. So again, timing is critical in this business, and a lot of people don't realize sometimes that markets will still make moves. They'll still get bounces. Nothing goes up and down in a straight line ever in this business, whether it's a commodity or a stock. It's just not the way, markets work. They work on emotion. They work on mathematical configurations. And, that's still, I would love gold right now had it hit 1,500. Had it hit 1,500, I would say, don't sell a single ounce, but it didn't do that. So that tells me that it still may come back down there, and I think it will.
Right. And because you mentioned silver, let's go in that direction for a little while. You told us last year when we spoke, silver could lead gold. Is that what you see coming in 2023?
Oh, that's exactly it. Silver is leading gold, and I think the silver bottom is in already. So what I'm waiting for, I've exited all my silver plays, but we hit the ball, we hit the cover off the ball, so to speak, because we nailed the low, and then I got out very, very close to the recent highs. And now I'm just sitting back and waiting for it to retrace or give me a bit more of a bullish pattern to get back in. I do believe silver ultimately heads above $30, and I'd love to be able to catch that in the high teens ultimately.
Yeah, maybe we can talk about, so high $30 in 2023, perhaps. I think that is an exciting number for people. It's something that we really looked for in 2022 and we didn't get. What low point, I guess, should people be looking for in silver to determine this is when I may want to enter?
Yeah, I would probably say 18, 19 would probably be an attractive number. To be honest, though, it's really going to be about the pattern and not so much the price, because silver's been almost resilient as it's just gone sideways here for the last month. It really hasn't broken out to new highs, but it hasn't been breaking down either. So it just goes to show you how strong it's been. And, silver is in every single product that we use now, whether it's a computer, a cell phone, a laptop, it's in cars, it's in all of these solar products. They can't run without silver. So you have an industrial demand and you also have the physical metal demand. And that's just a very, very good 1-2 punch. But if you can pick up silver 18, 19, I wouldn't even care about the pattern. I'd say just get right in.
Okay, well, thank you for going through that. So I want to ask, I know that you focus really heavily on the charts. You try not to let all the outside noise influence what you're doing, but what is the backdrop for these potential moves in gold and silver that we see coming? Maybe, for example, we could talk about the outlook for the US dollar as we head into the new year, because that was an element of strength that seemed to weigh on them last year.
Yeah, well, the dollar can still rebound again. And a lot of people have the misconception that the dollar and precious metals can't rally at the same time. And I've seen them do it from time to time for upwards of over a year. So they can rally from time to time together. The one thing I would note here is the reason why precious metals are going up is people are starting to lose faith in government. They are losing faith, at least here in the US. I see it. We have a big divided country. You have politicians that continue to divide. You have this left-right paradigm that's going on. And that's just telling you investors are saying, I'd rather own something tangible than own something that's, out of the land of make believe. So when you look at precious metals right now, people are saying, hey, I need to own gold because there could be a world war. I mean, just yesterday, I'm hearing this, Armageddon clock, we're 30 seconds away. Whether or not that stuff is true or not, what's the ultimate safe haven from the beginning of recorded time? It's been gold and silver. That's what people used as real money. It cannot be printed by governments. It's not elastic. I believe the last time I checked, the most gold that is mined in a single year is a 3-foot Olympic-sized swimming pool. And that's throughout the entire world. So that's really not that much when you think about it, for an entire world of 7 billion people. When you look at the governments right now, whether it's, Republicans or Democrats, these people just spend money endlessly. They just have, a checkbook that has no limit to it, or a credit card with no limit to it. And people are starting to say, hey, they're going to, the Fed is raising rates are going up. They're going to start paying, debt, have to pay, service this debt. How are they going to do it? I feel more secure owning precious metals. And that's why I'm in silver and gold as well. I mean, I've been a firm believer for many years. I'm not the so-called gold bug, because I tell you when I think it's going to go down. I tell you when I think silver is going to go down. And when they fall to really good levels, that's where I snatch them up and I buy both the physical, and I'll trade it via the products that are out there, like the GLD or the SLV or the GDX or any of those gold miners are a good play to play at silver miners as well. So again, I try to tell everybody, it's not a one-way street in the markets. It doesn't matter if it's the commodity market or the stock market.
I think that's really great advice. And, when we talk about trust and, you're mentioning the Fed as well. So I think there's something interesting going on there, because we have the Fed telling us they intend to keep hiking, and the market seems to think maybe that won't happen. So can you talk about what's going on there? What's that dynamic?
Sure. So basically what the Federal Reserve has done in this, well, first of all, they said there was transitory inflation, right? They said inflation was transitory. We all know they were dead wrong. Now they're saying that they need to go to about 5% on the Fed funds rate, which is the overnight bank lending rate. Currently, they're roughly at around 4.25. And that's kind of where the 2-year Treasury note yield is. So the old saying for us veteran traders that have been around for a long time, we call ourselves dinosaurs. We know that the Fed, when they get to the 2-year, the Fed funds rate gets to the 2-year Treasury note yield, that's kind of it. The Fed doesn't really need to raise rates anymore unless the 2-year yield starts to spike higher. So they've kind of gotten to what we call mission accomplished, but they're going to overshoot a little bit because you still have a lot of inflation out here, and they need to be able to cut rates down the road a little bit. So that's why they're going to go a little bit higher. They keep, promising they're going to go to a 5% rate on the Fed funds. And we'll see if they do that. My guess is that they'll probably get close to that, and then ultimately they'll stop or even cut as the markets will go lower. So that's where we are. We have geopolitical events. We have rising rates. This is just a backdrop of a very choppy year. So I think traders better brace themselves. But the Fed should continue to raise. They'll probably just go quarter point increments, but they'll try to get it up towards that 5% level.
Right. And so you mentioned it's going to be a choppy year. So 2023, is this a year for traders or for investors? How can people approach this?
Oh, this is a trader's year. If you are an investor out there, you better get a seatbelt and, harness yourself in, because it's going to be very, very volatile and choppy. And that's the way the outlook is. It's not me saying that. If you just look at the environment out there, you've seen already since June of last year how the stock market has these enormous bounces, and then it comes crashing back down and makes a new low. Now, we haven't made a new low since October, but we will. And ultimately, I would be very, very cautious, on both sides of the tape, as these markets, sometimes can move on bad news because they think that the Fed is going to cut. And then sometimes they'll move on good news. So it's a tricky environment, but it's a trader's year. Traders love this stuff. Investors, this is not their environment. There's no trend, and it becomes very, very difficult to navigate.
Okay, and I want to ask you about a piece of advice that I've seen you give it to your followers on Twitter. You've mentioned it recently, just this week. So you said you have to remember that it's the reaction that matters. So I wondered if you could talk a little bit about that, explain what that means, because I think that could help people this year.
Sure. So if you have like an earnings report, we're in the middle of earnings season where you have companies reporting earnings. And it's the reaction that matters. Last night, for instance, Microsoft reported earnings. On the surface, the market took it as being pretty good. It rallied up. And then today, we see Microsoft right back down. So don't concern yourself with what they say. And that goes the same for a CPI report, a Fed funds rate announcement, or any other report. Don't worry about what these reports say. Watch the market, watch the pattern. And Charlotte, that's why I use charts, honestly, because I'm not smart enough to figure all of that stuff out. Think about the person that bought Microsoft after hours yesterday when it popped, $6 or $7 or $8. And today the stock is down from yesterday's close by about $8. So they're underwater, 15, 16 bucks already. So, again, watch the reaction. Don't worry too much about what these companies are going to say. They may say something good in their headline, but then they get to their conference call and it could be an absolute disaster, which looks to be the case with Microsoft.
Yeah, it makes total sense to me why you would take that approach. And I think that one question we get a lot when we have people on who do technical analysis is our audience wonders, you have two people looking at the same chart. How do they come to a different conclusion when they're seeing the same pattern? I wonder if you could talk a little bit about the nuance there.
Well, what happens a lot of times is two people can be looking at the same company or the same commodity and they'll have different opinions. Sometimes they just have different understanding of the technicals. So I teach everybody how to do the technicals the way I do it. You'll see that it has a pretty high success rate. The other thing that I like to point out is that you may be looking at a chart on the daily time frame, but a guy like me may be looking at it on the weekly or monthly time frame. So I'm getting a different perspective on a bigger scale where, you might be right in the short term looking at a daily chart, you'll get the pop, but ultimately the bigger time frame is telling us something different. And that's when an equity could, move back lower if I have a different opinion from you. So again, the time frames are very, very important. The type of trader you are. Sometimes you could have a bullish chart on the daily and an intraday chart could be very bearish. That intraday chart may play out. And then ultimately the stock will move up because the daily chart was bullish and, it took precedence eventually. So, a lot of times you get a lot of conflicting stories because of the time frames.
Really interesting. And while we're on this topic, is there a starting point that you would recommend for somebody who wants to get into reading the charts and understand that a little bit better?
I definitely, you start to learn and understand trends. I would start that way. I would also start with just, temporarily exploring the moving averages. See how these moving averages trade according to a stock. And don't forget to look at different time frames. I see so many people in my own group, where they'll just, isolate themselves at just looking at a small time frame. And I say, hey, you're missing the pattern here. Look at this bigger time frame. This is painting a different picture. So, one chart could look like chaos and another chart could look like a Picasso. And traders have to realize that, there's a lot of work that goes into studying the charts. I've been studying them now for over 25 years. And again, I still learn things each and every year. It's remarkable. And I'm very blessed to say that every year I find something new. And again, you got to start somewhere, but at least, you'll see the funny thing. When there's a bull market and the trend is up, everybody's a fundamental trader. When there's a bear market, you're going to notice that everybody's running to the technicals.
Oh, that's very funny. So that was really helpful. I think that's great advice for people who are looking to get started there. I want to go back to looking at some commodities. I remember last time we spoke, you were feeling bullish on oil. Wanted to check in on that and see how you're feeling about oil at the moment.
Yeah, I would be careful with oil right now. I do think there's a little bit of upside, but the patterns have shifted in oil. I didn't like what I saw recently when it broke into the low 70s, and now it's rebounded back up to the $80 area. So I think oil has work to do to improve the chart. I did trade oil back a while ago. I got in and had a big score in it, but at this point in time, I'm not in love with the pattern. But if oil gets down to around the $50 area at some point, I think you just buy it with both hands and you just hold on to that thing because it's going to be a big, big winner there. But right now, the pattern is not so great with oil, and I would be a little bit cautious with it.
Are there any other ways that you're looking at to get in terms of energy? I know it's pretty interesting right now to a lot of people. So actually, maybe that's a reason not to be in energy at the moment.
Well, energy has turned out to be like a safe haven now. So it's a little bit extended and too high on the charts for me. I've steered clear of it. Like you said, I've said I did trade oil down the road a little bit in the past, but now I'm steering clear. And I think the energy stocks, while they can still do fairly well, I don't see a lot of upside because they're just too extended on the larger time frames. And anytime something gets that extended, it needs to consolidate those gains or it needs to come back down. So I'm going to steer clear of energy right now. I do think there's some upside in a few different energy plays, but I think overall the group has had a great run, and now it needs to digest those gains or even correct a bit.
Okay, and so we've kind of gone over areas we've talked about previously. Are there any other sectors that you're looking at in 2023 with optimism?
Well, it's going to be a trader's year. So, there's no particular industry group that gets me, ultra excited here. Like I said, after precious metals correct or pull back, I'll probably get excited about that group. Silver in particular, that's been my favorite trade. Gold at some point will be. But outside of that, I think it's just going to be, reading the charts and really navigating these choppy waters, because that's what we're going to get. And, even as far as the stock market goes, we'll see very similar action there. You'll see these markets rebound sharply, and then they'll come down pretty significantly. So I would be a little bit cautious this year. But, if you're a chartist, I think there's going to be tremendous opportunities.
It sounds like we are going to have to be a little bit patient, which can be difficult for people who want to see results immediately. So any advice there? Like, do you have to always be in the market? Should you be on the sidelines at some points?
Sure. The old saying is cash is a position too. So, what I tell all of my members, we just closed out 2 days ago a Tyson Foods trade. And the second half, I think we made 8%. We closed out a Sky trade, which is a play on cloud software. We made, roughly about the same. And what I told, I got a lot of emails saying, why are we getting out of this trade? I said, this is how the market's going to be. You're going to get in when the market tells you to, and you're going to get out when the market tells you to. Don't worry about always trying to hammer home, a 20% winner. I said, this is how it's going to be, choppy and sloppy. And, sometimes you just got to take those profits when they come. So, it is difficult for a lot of people to understand that sometimes, especially coming off of a bull market from 2009 all the way till the end of 2021. But this is how bear markets are. And, most of the newer traders have never been in a bear market. They've never experienced it. So, it's a different environment. And again, if you don't have patience, you just won't make it.
Perfect. Well, that sounds like a good note to end on. Maybe as we wrap up, you can let people know where to find you if they want to learn more, and just any other final thoughts that you would leave investors with for 2023.
Sure. Well, 2023 is going to be a very choppy year. So please learn the charts. And I always say that. I think every time I always tell everybody, just get educated on the charts. You'll have such an advantage over the crowd out there. And that's the most important thing. And anybody that wants to reach me, you come on over to my Twitter feed, Nick Santiago 01. I even have a YouTube channel. The link is there. And you could also email me at nick@inthemoneystocks. And again, I do my best to help others. And, we're very transparent on everything we do. And again, just brace yourself, because it's going to be a choppy year. So navigate safely.
All right. Well, definitely appreciate the time. We'll check back in with you later this year. Thank you very much for coming on to talk.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Nick Santiago with InTheMoneyStocks.com.